Hi, my name is Annette Yee, and I am a financial advisor to California school and community college districts. I work for Montague DeRose and Associates. In particular, I'm here as the FA to the California School Finance Authority Pooled TRAN program. I would like to introduce my co-presenter tonight, Carolyn Larson, who is our CSFA cash flow consultant, to tell you a little bit more about herself.
Hi, Annette. Thank you. My name is Carolyn Larson. I'm a partner in the public education consulting practice at Eide Bailly. Eide Bailly is a public accounting firm that audits and consults with California public education clients. Annette and I have been helping each other with technical topics for years. We are here today to let you listen in on our conversation about cash flow. Annette and I help each other, and we hope it will help you.
Today, we're going to focus in on some important concepts to help you prepare your TRAN cash flows as accurately as possible. I'm going to switch over to the TRAN cash flow template at this point. So here is our TRAN cash flow. And, after all of the years of Carolyn's and my working together, we've found that there are certain things that are particularly challenging for districts as they work on their TRAN cash flows. So we thought we'd kind of just work on a few different items that we think might help you as you fill in your cash flow, and particularly with a focus in on the balance sheet. So the first thing we wanted to do was talk about how you need to make sure that you're starting off with the right numbers. So where should we start off with that, Carolyn? I think it was the balances that you put in for your cash, etc.
Yes, the first thing that I take as a source document, Annette, is I get my audited actuals for 2018-19 fiscal year. And I start populating column D, the beginning balance column that is in blue. All of the blue cells are cells that we can populate. The white cells are protected. So this is our opportunity to start off correctly.
Okay. So what you would do is make sure that you put in, for instance, the ending cash from your 2018-19 audit, and you would put that in to cell D43 so that you are starting off with your correct beginning cash. Is that what you're talking about?
That's exactly right. We want to make sure that our beginning cash on 7/1/2019 is the audited cash. Most of the clients that we work with have cash in treasury. Some are fiscally independent clients and may have cash in bank, but we're going to assume that everybody is working out of the treasury for this exercise.
Okay, so you put the number in here in D43, and if you're a different district, you might have some monies in some of these other accounts, etc. And then you put in things like your balance in your accounts receivable.
Exactly. Our accounts receivable is those are the items that people owe us. Those are promises that people have made to pay our organization. Some of them come from local places. Some of them come from other grantor governments. Some of them come even from the funds of our own district, like due from other funds. The other asset category, that would be something like inventory or prepaid assets.
Oh, okay. That makes a lot of sense. And then, so you finish this off by putting in your liabilities. So you might have some accounts payable, accounts that you owe money on or something like that.
Exactly. So for items that we have that we might have received goods by June 30, 2019, but we didn't have time to pay the vendor. Maybe we didn't get the invoice in time. We also have situations where we might have borrowed some money from another fund and did not pay that money back. That would be an example of due to other funds. Or we might owe the state of California some money back, and that would be a due to a grantor government. Those are just some of the liability accounts that we might have at year end.
Great. Okay. So, um, I've just put in some sample dollars here to start us off with some monies in our account. So we started off with $2 million in cash, and then we have some monies carried over from the previous year in accounts receivable and some in accounts payable. What would be a way for us to figure out how to deal with accounts receivable in your balance sheet? I mean, so this district has $100,000 balance in their, this is the 1920 year, and so these are the actuals that you would normally be putting in, but we thought for purposes of demonstrating how this carries through, we're just going to use this as a screen to show you how things move forward. Does that make sense, Carolyn?
Yes, I like your approach, Annette. I think what we're going to do is we're going to just scroll to the end of our sheet and see where it's column S. In column S, if
Yes.
absolutely nothing happened during the year, if we didn't pay anybody or if we didn't receive anything, that's what would happen. You see how
Yes.
that balance would remain? What
Right.
that means in column S is that somebody still owes us 100,000 and we still owe somebody 80,000, right?
Got it.
And
Got it.
since we didn't pay or receive anything, we still have, I think we should have some cash that doesn't change according to this template, right? We're
Okay.
going to have a cash balance that never changes because
Right.
we didn't do anything, right?
Right. So we started off with $2 million. We end the year with $2 million. And that's because we didn't do anything on our balance sheet. I think that most people seem to be able to understand the transactions when they're talking about putting in the income statement. That seems to make a lot more sense to them. So it's monies, revenues that we're receiving, expenditures that are going out, but somehow the balance sheet can get just a lot more tricky. And so that's why we wanted to talk about it. So focusing in on that, well, what do you do? How do you um, deal with the fact that you have monies owed to you of the accounts receivable? How do you receive that money in? Because someone owes us that money, and how do we show that they've got the money in, and how does that affect our cash?
Well, let's try some sample entries to see if
Okay.
we can make this work.
Okay.
For example, let's assume that somebody paid us the $100,000 and you can put it in any month that you like.
Okay. So let's say that it was something that was due to us, and they said that they would pay us by the end of the first quarter. So let's say that we received it in September. So if I put in $100,000 here, oh, it just made the line item in column S a 0. And so it looks like by my receiving the 100,000, it zeroed out the balance of the accounts receivable. And all of a sudden I noticed that I have 100,000 more in cash.
But you're so experienced with this cash flow template, Annette, since you developed it over the years. What if you're new and you didn't know what sign and you put a negative 100,000 in?
Right.
What would happen?
Yeah, because I actually am thinking I want to offset that 100,000. So I put in the negative 100,000, and oops, my balance went up to my balance went up to 200,000 in the accounts receivable account, and my cash went down by 100,000. So I just lost $100,000, and I was supposed to receive the money. So that,
Exactly. So that those are the two items that you want to be keying in on, right? What
okay,
is the effect, the final effect of the accrual, which would be the accounts receivable? Do I really want to show that somebody now owes me $200,000 and that I have 100,000 less in cash? That just doesn't make sense with my story. So I think it's really important that when we're doing our input, that we take time to think about it and tell a story about it.
okay, that makes sense. So I guess I should go back to 100,000 here. And that'll zero it out. And then I've received the 100,000. Now, what would happen with my accounts payable? I owe that out to someone. So I think that, let's say I'm going to pay them in August, because I owe them $80,000. So I think that I would put in, that I owe them. So that's a negative to me. So I'm going to put in $80,000. Oh, so then that zeroed it out too. But if I had accidentally put in the $80,000 as a positive, what would have happened then? Oh, so if I had put in this as a positive, so the same as what I did with the accounts receivable, then that would have created a doubling up of the accounts payable. And therefore, also, it affected my cash. So all of a sudden, my cash is increased by $80,000. And that doesn't make sense because I just paid something out.
That's
Interest.
exactly right, Annette. Like what we've done is in this error that we've made, we've changed our cash for the wrong. And then we've also created where we owe 160 when we don't owe anybody anything right now, right?
Okay. Okay. So I did it correctly the first time, which was I was thinking of it as I'm paying someone out, so it's a negative, but it is the opposite of what you would do with the receivable. It's actually the complete opposite. So in this case, the receivable has to be a positive number when the receivable is received. But when you are paying out your accounts payable, this needs to be a negative number to offset it. Otherwise, you're increasing your payable.
That's correct. And that's why, it doesn't matter who creates the spreadsheet. And what sign we use. We have to actually familiarize ourselves with anybody else's work. And this is the way that we can do it, right? Because you and we're working on many spreadsheets, and some of them we've developed, some of them we haven't developed. And so we have to just test it out so that we get the result that we want. And this is how we do it.
Okay, to make sure that and in this case, our cash actually went down by $80,000. So what that means is I've just paid out that 80,000, and therefore I end up with, instead of, I had 2,100,000 before I paid out this 80,000, and when I pay it out, it reduces my cash, and it also makes the accounts payable zero out. So in any given year, the idea is to end up with a zero in terms of your accounts receivable and accounts payable. And I know that's supposed to be correct accounting, but I'm not really sure I understand why that is.
Because we can pretend if we were running a business, right? Annette, if this
Uh-huh.
was your business and somebody was going to give you $100,000 and you're counting on that for payroll, you might not be able to make your payroll if you don't receive that. And the same thing with the government entity. We have to be treating that kind of money with that same level of attention, right? Because especially where we're going into this deferral environment, we could be overstating. If we were to fill in this cash flow incorrectly and have that positive $100,000 there that we never actually received, that would be a problem, wouldn't it?
It would.
So let's pretend in this environment, let's pretend that we found out that the entity that was going to pay us due to COVID is now gone out of business. Say somebody was renting, for example, somebody could be renting our facilities and something happened to their business and they can't pay that receivable. These are real life scenarios. We've had this happen. So let's try to figure out what we would do in that scenario. We don't want to show where that person's going to pay us anymore. So our receivable is 0. So we know that's correct, but our cash has gone up as if we received it, and that is incorrect.
Right. So because we didn't actually receive the money right now, let me just, shall I remove the payable just so that it's a little less confusing? Maybe
I agree.
let me zero that out. So, okay, so right now I'm showing that the amount of cash I started with was $2 million, but that I've received $100,000 because I know it was owed to me. But what you're saying now is that the actual thing that will happen is that the $100,000 is not going to be paid to me. So
And
how
you
would I
just
do that?
Right, and you just found out in September, right?
Okay,
You had
so
counted on it. So then we go up, let's pretend it was rental income because that's a real life scenario.
okay,
And we go up to other local revenue.
okay,
And let's see, that to me seems like it's going to be a negative revenue, doesn't it? Because we claimed revenue in a prior year. And
right.
now we're not going to get it. So if we were to average the 2 years together, it would go to 0, which is what we want.
Okay, so that means that I would put in here, instead of receiving the revenue, it would be that, which would be a positive under revenue. I would have to put in a negative revenue, which would be negative 100,000.
Let's try and see.
Okay, so we put in a negative 100,000, and there's a number that showed up over here on column S. So now we have a negative $100,000 effect on our total. And as I look down on the totals here, I see that the cash effect that has offset the receivable that's there. So now we started the year with $2 million. We're ending the year with $2 million. So even though we had that $100,000 in that receivable, because I am no longer I'm writing off. Is that what you would call it? Like kind of like a write-off of a bad debt?
That's
Um, okay,
exactly right. It is a
okay,
write-off of a bad debt because now we know this is correct. Because if we were to look in last year's financial statements, we would have seen $100,000 of income in the rental income area.
okay.
And now we have a negative. So if we were to add those 2 years together, we would average to 0, which is correct because we actually got 0 revenue over the course of 2 years. And then nobody is ever going to pay us that rent. So we don't want to keep any inkling of a promise that somebody's going to pay us. And so when we look in column S, that's reflected in that 0 balance of accounts receivable.
Okay, so that's there. And it's okay that there's a negative in the income statement for that?
It is okay because we had a positive in the prior year of 100 when we set this receivable up. If you were to go to like cell D 50, where we where we have the receivable balance start,
Yeah.
that receivable balance was created in a prior year by creating income as the offset.
Okay. So because we were expecting that we put it in as revenue received, but we didn't actually receive the cash, then we put in an offset in the accrual line saying, I'm going to receive that in a future year in September or whatever day we thought it was going to be received. But because we didn't actually receive it, now we're recognizing that we're not receiving it any longer. And then all of this is zeroed out.
And I'm just going to add a little something to this conversation is,
Yeah.
what if, say we discover this in September,
Yeah.
and we're LA Unified. Well, LA Unified, $100,000 probably wouldn't really affect their income that much, right? But if
Right.
we're a very tiny school district that might only have 200 children, we were really depending on that, right?
Right.
And so we might not want to show a very large negative in our income statement. That
Okay.
might be confusing to everyone.
Right.
And so why don't we delete that cell,
Okay.
and let's see if we can get the same effect in the same column on line 62.
Okay.
Because let's say that this happens and we tell our auditors, because that's the
Oh,
right thing to do, right? Tell them.
right.
And let's see if we can create this same effect by putting $100,000 there and changing the fund balance.
Okay.
And I don't know which sign we should do. We'll just play around with it.
Yeah, I put in 100,000 into the audit adjustments, restatements and adjustments line. And it looks like that actually doubled it doubled the amount of what was owed. And it shows then that we have extra cash, like another 100,000 than we expected. And that's not right. So it's got to be that this is going to be a negative, just like we had put in the income statement. So I think we have to go back to a negative here. Let's see if that works. Yes. Okay. So now we have the negative 100,000 and we've put it here. It didn't affect our income statement, but in fact, this restatement allows you to, that along with the income from the previous year ends up being a zero, but you don't have your income statement be off by that 100,000. So that would allow you to still match with your budget. Is that what you were concerned about?
Yes, because say for the larger district, they would reverse it into their income statement and then just budget for that $100,000 negative, right? Because for them, that little bit doesn't matter. But for a small organization, and maybe their audit firm found it and questioned them on it and made it a part of the audit because it is material to their financial statements if they're a small organization. Or say as far as say the audit was there in September and everybody was really expecting that business to pay that receivable, and there was no sense that there was a problem, but maybe after the audit was issued, maybe that collection was defaulted on, say February or March, and that would be a situation where you would clear that receivable the same way we just did, but it would be under the fact of being a restatement rather than an audit adjustment. It'd be on the same lines, but we just call it something different.
Oh, okay. So that's interesting. So would that be, so if that didn't get figured out until February, would this entry be under February instead?
Yes, we'd move both the 100 from the accounts receivable and our state. We'd put both of them align with each other in the February column.
Oh, I see. Okay, so then you would put it here and under here, because otherwise, if you didn't put them in the same column, then it wouldn't zero out in the vertical in this line item. If you,
Yes,
if
it would
I
be
had,
very, very confusing. It would be a one-sided entry, which we hope financial systems can't do that.
oh,
But we have seen where certain programs don't always check for unbalanced entries, some softwares. And you can see how
oh,
confusing this would be. It's inappropriate. You know how they say double entry accounting, and we
oh,
need to have 2 entries for every idea.
okay, and they should be in the same period, is what you're saying. So,
Well, whenever we post a transaction, it should have a debit and a credit. And otherwise we should not be posting something that is only one-sided.
right, so it's considered one-sided just because it's off in terms of timing?
Well, you're exactly. Yeah, that would be, well, if we just put one at, the only reason on this cash flow, if we just, and we're to delete, let's delete the -100 and leave the 100 alone by itself and the receivables.
Okay,
We're only entering one item here because the offset is cash. So this is really a double-sided entry, because the credit, for those of the group that are accountants and trained in that way, the credit is in the accounts receivable area and the debit is cash. And that is why you're seeing it change from 2 million to 2.1 million.
right. And so that's okay to leave it this way if this happened to be you're actually receiving cash. But the example we were just giving was a write-off of a bad debt, and therefore you needed to either put the offset in the same month under the restatements and adjustments, or somewhere in the income statement as a negative income.
And how I would know where to put it in the income statement is, it's really important for me to look up where I initially set that receivable in the prior year. Was it a lease? Was it a rental? Was it an interest receivable? I mean, it could be a number of things, right? And we'd have to look up the account string to know exactly what area we should put it to.
I see. So you're saying, you're talking about which object code to put it under.
Exactly, because we want to align it with where we initially thought we would collect it.
Got it. Okay. Do you think that we need to go over something, a similar thing for the accounts payable, and how that would work? I mean, like in this year, there were a lot of districts that might have ordered something, and like Chromebooks, for instance, which were back ordered, and then eventually the vendor never paid it. Or do you think it's straightforward enough that it's a similar thing as what we just did for accounts receivable?
We can do a quick one of payables. You can clear the 100,000 and put the 80,000 in, and we can show people how that looks.
Okay.
And we can delete the 100,000 in the receivables.
Yep.
And put the
I'll do
80
that.
here.
Yep. Want to make sure we're all cleaned up everywhere. Okay.
So what
Okay.
we're going to assume is that somebody received some Chromebooks by June 30th, and they were estimating the cost. They had called the vendor and done everything that they could, but they weren't really sure exactly what the invoice was going to be to the penny, right?
Okay.
And so it's okay to estimate as long as you know that it's going to be close, but sometimes the invoice comes in slightly different. Could be due to tax, shipping, anything. So any discrepancy, what we want to show is, let's say that we paid this vendor $70,000 and $10,000 really isn't owed to them. We made a mistake in our estimation, possibly because we were given some poor information, right?
Okay. Okay. All right. So how does that work? So,
So let's put $70,000 there and see what happens.
okay.
Okay, so I think we have a problem immediately, right?
Oh yeah. It just, our cash went up again.
Right, and our obligation.
And our obligation just went up by $70,000. So I must have put that in with the wrong sign. So I guess I should be putting it in. So we're actually receiving or paying out $70,000. So that has to be negative because it's paying out in this particular spreadsheet. The accounts pay, the payment out is a negative, and our obligation went down to 10,000. Our cash also went down by 70,000. And that's correct because we made a payment out, right?
So far, so good, right?
Yeah.
So far, so good, because our
But
cash
now we
went
have a balance of 10,000, and you said it would be better if we could zero it out.
Well,
Our-
what we want to think about is, do we really owe anyone $10,000? Is that true?
Oh,
It's not true anymore, right? We have better information now.
okay. Yeah. Because maybe the shipping was less, or we got one fewer, or 10, however many fewer Chromebooks or whatever it was. Okay, so how do we offset that?
Well, first we'd have to think about what account did we set those Chromebooks up in. They were probably in the books and supply area on line 31 was probably where we claimed that payable to that expense earlier in
Okay.
the year.
Okay.
So let's see if we put $10,000 up there, what will happen?
Okay. We did that, and that,
That doesn't look like the right answer, does it?
no, oh yeah. Something just happened. It made our it changed our cash to 1,920,000, and that doesn't seem like the right thing. So I probably did the sign wrong again. Is that right?
Yeah. You know what might be easier, Annette, for people to see is, let's say that we didn't discover that we're not going to get another invoice from that company.
Mhm.
Maybe we discover that in August. That
Oh,
might
another,
be
let's
clearer.
do it in a different month, you mean?
Yeah, might be clearer for people to see.
Okay, so I'm still gonna do negative, but I'm gonna put it here,
Right. Because
10,000. Oh, because
right.
we
And
didn't
then,
figure it out. We didn't figure it out till the next month. So we received the updated invoice for 70,000 in July, we pay it. And then, but in August, we discover that we're not gonna owe the additional 10. Is that what you're saying?
that's exactly right. And so
Okay.
how I know that we're not quite done is I looked in my column S, and I'm never going to pay that $10,000 in, let's see, line 56.
Line
50,
56.
it would be S, column S.
Yes.
There you go.
Yeah,
Right
the
there.
accounts payable.
Yeah, that $10,000 is never going to be given to anybody, so we
Okay.
don't owe it. So we need to clear out our accounts payable with an entry, right?
Oh, okay. So how do we do that?
Let's give it a try. Let's just put a number in there and see if it will decrease that liability.
Okay. So we need to put a number, and it has to line up in the same month, like you were saying, kind of balancing entries. So let's see.
There we
Oh,
go. That looks like that might be more appropriate because we no longer have an obligation, and it's okay to leave that negative expense there.
this one here.
Because, yeah, because if that's the only transaction we did all year, it's okay to say that we overclaimed the money in the year before. And
Okay.
if we were to average the 2 years, add the 2 years together, we would get to what we really spent on our books,
Okay.
right?
So what happened was we started the year with $2 million. And of course, this is very simplified, and you would have, but we're trying to give you an examples so that it makes sense. You started out with the year with $2 million in cash. You paid out monies to on an invoice that you owed from the previous year of $70,000. But you realize that that was the original amount that you thought you were going to owe was 80,000. So you have to clear that out and try to get this balance in column S to 0. So you put in the 70,000 that you actually paid, and that reduces your cash by that amount. So you start at 2 million and you get to 1,930,000. But on top of it, you also have to reduce what you owed on that that supply order, and you also want to offset that with the payables offset. So by putting in another negative 10,000, that balances it out in terms of cash here. So you end up only spending the 70,000, and you also have a 0 in your accounts payable.
And we can also, if we were at a small district, this $10,000 might be a big deal to the and material, right? So we can yes, delete that and put
Okay.
it down in the audit area.
Oh, that same place we put the other ones before. Okay.
Exactly, because
So
that might be an audit adjustment at a very small district.
got it. So now we're off in our cash again. We're at 1,920,000 instead of 1,930,000. So I'm still not sure which way I would do it. Is it, am I offsetting it by putting the same entry in? Oh no, that made it worse. So I'm going to put a positive 10,000, and that'll get us back to the right level. So this 10,000 offsets the negative 10 here, and then we're at the right cash. So the
Exactly.
audit adjustments won't come out to 0 then, is that right?
Exactly. That will be changing your fund balance. It will be an improvement to your fund balance if you don't owe something.
Okay. Okay. Because otherwise, if I had spent the full $80,000, I would only have 1,920,000 in cash. But now I
That's
have
correct.
1,930,000. Okay. That makes sense. Now, this is in a very simplified form, but basically you do the same thing for each of the transactions, and you kind of have to look at each transaction individually. So that makes sense to me. So we've talked about, kind of clearing out the balances of the accounts payable and the accounts receivable lines, where we want to end up with a 0 in the total for the year. Can we just really quickly show how accruals from one year carry forward to another year, and how you pay those down, or how those come out? I mean, how would I show that?
I think that's a good idea, because right now we have a good situation on our balance sheet. Our balance sheet, all the accounts are 0 because we've reconciled, Annette. We've either said we're going to receive our receivables, or we're going to write them off. We're going to pay our payables, or we're going to write them off, so that now we have a clean view of where we are going to close. So let's do something. For example, let's say that we got some books delivered to us,
Okay.
and they arrived by June 30th, but we didn't get an invoice.
Okay.
So we know we have an expense to pay a vendor in the 4,000s on line 31, and it'd be in column R, our accrual column.
Okay. So I put it in here because I didn't actually pay out yet. I got the books, but I didn't make a payment. So I'm going to owe money here.
Exactly.
Okay.
Exactly.
So
you're gonna maybe put I don't know, $200,000 there.
okay.
Now
Okay.
let's just see what happens if we don't do anything else in that. What would
Right.
show? How did our cash change?
Okay, let's look at that. Our cash went down by $200,000.
But we know we didn't pay that vendor. So that means that we have to make an entry in accounts payable, doesn't it, to offset that?
Oh, because we didn't actually spend the cash. So
Exactly. We just
because we
owe
did,
something.
okay.
Exactly.
So we're gonna have to put money under here. And I'm not really sure which way it should be, if it should be a negative or positive. Let me try. If it's a negative, let's see if that, because that one was a positive. I don't know if oh, that made it worse. So I think that this is going to have to be a positive.
Exactly, because we want to show that we owe the money, right?
Okay, because then you want a positive accounts payable, not a negative accounts payable. I get it.
Right, and we don't want our cash to change because we haven't had the opportunity to pay the vendor yet.
Okay, so we were at 1,930,000 for our cash, and now we're still at 1,930,000 with our cash. Okay, so let's see how would that affect us. Okay, so I think we've figured out that the 200,000 is offset correctly with the accounts payable. Should we see what the effect is in the next fiscal year? Oh,
Yes, this is
okay,
very
so this,
important,
yeah, so
right?
this is 2021, so it's the next year, and 200,000 is now our balance of our accounts payable.
Exactly. And so these are items that need to be tied to your 2019-20 unaudited actuals, or if you're audited already, you would tie it to your audited actuals.
Okay, so wait, say that one more time. I wasn't sure. This would be, so this is the carry forward of the previous year's monies. This should tie, since this is now the next year, this should be the unaudited actuals from 1920.
Exactly. And that's why it's so important that when we're filling in this template, that we're checking to source documents like our unaudited actuals, so that we're making sure that the balance sheet items are coming forward correctly. Because this is a protected cell. Remember, we can't change that.
Oh, gotcha. All right. So if, and the problem is if we don't get it right in all of these balances and then get all of the accurate information into the actuals, then the balances here, which are what's going to carry forward into the next year, won't make sense either. And so that's why, is that what you're saying?
That's exactly right. So we have to be very careful at every juncture that we're entering data in, right? Because this really matters. Whether you saw how if we put it in the wrong month and we only had a one-sided entry where the offset was cash, we're increasing the cash. But since we put in our accounts payable offset, it brought it forward and our cash didn't change, which is totally appropriate for that particular transaction.
Okay. So now we have $200,000, and say that matches with our accounts payable, because we do owe that vendor $200,000. What do we do in this year? In our projection year?
Well, since you've learned so much in the last half hour, I'm going to let you give it a whirl.
Okay. So I'm going to say that in July, I'm making a payment of $100,000 because I owed half of it. And that just reduced my cash by 100,000, which is correct because I made that payment out, but I still have a balance of another 100,000 due on that accounts payable. So I think I have to make another payment in order for my payables account to clear out. So I could put maybe another 100,000 at the end of September. And then that makes my accounts payable balance at the end of the year 0. So that's, I think, what you told me to do. And it's reduced my cash by $200,000. Was that correct?
That's correct. And I just wanted to add something that people need to be like, I know that we have giving simple examples, but say you deleted that 100,000 that you just typed, Annette.
Yeah.
So if we were to look in column S and we see the 100 there, that might be 100 different vendors, right?
Oh, that's true.
Right. And
Yes.
so when our firm assists people, we don't go back to the beginning of time to find out. What we try to do is look, when we ask the client, do you owe anything to anybody for any amount? Because if you don't, then we need to again write down that balance so that we're not carrying a payable that isn't owed to anybody.
So this might be a more accurate, or what would actually happen with a district, because it's not just one vendor, it's not just one payment or two payments, but it's multiple payments paid to multiple vendors. And the goal is to get to zero at this point, and if not, then to write off the payment like we showed earlier.
And honestly, Annette, we wouldn't really be needing to have this much of a discussion on this topic if a lot of the systems that we worked with had these items programmed into the system, into the various modules, and the modules were used properly,
Mhm.
and people basically set up receivables that they were going to receive and payables that they really were going to pay, and they understood the modules. What happens in a lot of clients throughout the state, their software isn't programmed to do this, and it can cause some confusion.
Got it. Okay. All right. So, and a similar thing would happen with the accounts receivable. I don't know. Do you think we should do another example of that, or is it very similar to what we just did for accounts payable? And should we show a different kind of an example?
I think what we could do is move to maybe we have interfund borrowing sometimes. Sometimes
Ah,
that causes a little confusion.
okay. So the interfund borrowing is shown where, maybe I should clear out, should I clear out this accounts payable for now? Make
Yes, let's
things,
clear out all of our prior entries.
okay, okay. All right, and here, I think that will take us to, oh, we had a 10,000 somewhere. Oh, here we are, and an audit restatement. Okay, we're at $2 million and $2 million here. So how do we deal? Oh, and I have to clear out this this year's information as well. Okay, I think we're back to where we started with $2 million in cash, but you were talking about interfund borrowing. So what does that mean? So if you had to borrow from another fund to the general fund?
They can go different ways, right?
Okay.
Sometimes the funds owe the general fund, because sometimes what happens is that a fund may well, a good example is that health and welfare benefits, for example, maybe the general fund pays the bill for all of the funds of the district, maybe adult ed, cafeteria, child nutrition fund, state preschool fund, and at the end of the year, it's owed money. So we would have money and due from other funds, maybe $250,000.
Okay. Should I put that in there, or do you want to do, which
We
one do
can
you want to?
do, that would be one example, but I think we could do a different type of example. What if
Okay.
somebody is really struggling as a district and the general fund is short on cash and it needs to borrow from another fund? Let's
Okay.
put $500,000 in the square that says due to other funds.
Okay.
Let's see, yeah, D58.
Okay. So that means money is owed from the general fund, had to borrow from another fund. So it could be any of the other funds that exist that a district could borrow from.
Exactly. So maybe they borrowed from a Fund 17 as an example.
Okay,
So let's say that they're able to pay that back right away. Maybe
okay.
it was just to pay the July 1 payroll,
Ah,
and now they're able to pay it back.
okay. So if they're able to pay it back, that would be in July. And I don't know if it's a,
Let's just give it a try.
okay, so they're paying back in July what they owe. Wait a minute here. So that just gave them an 500,000 more in cash. So that can't be the right direction. So it has to be, because they just paid that back. So it should make the cash go down. Okay, so that makes sense. Okay, so I just went negative 500,000. They paid it all back in July. And so, and I'm sorry for the very loud rain outside of my window. I hope you can't hear that.
No,
So
everything's fine. What I was
good.
thinking, I just wanted to add, Annette, to the conversation to say that now we can also see that we don't have an obligation in column S.
Right. So it's been zeroed out. Oh, and when I had the $500,000 positive, I'll bet you it said $1 million here.
It did. It
So
did.
that would have been, so you can check it by checking your cash. You can check it by checking what the column, what the balance is in the total column. That makes a lot of sense.
Now, I
Okay.
have some clients that are really struggling and they have to borrow again.
Oh,
And so
okay.
let's put in $1 million in August because they have to borrow again.
Oh, so they just paid it back, but then they have to borrow again?
We do have some districts that struggle a little bit until they get their December taxes, as an example.
Okay, so they're borrowing from another fund to do that. So that just gave them $1 million more in their account, which means they got $1 million more in cash, and it looks like they have something showing up in column S.
Exactly. And this is sometimes people get a little confused because people will ask them, say the county office, an oversight agency might ask them, hey, did you pay that back? And sometimes people get confused whether that obligation is still sitting there or not. And we can easily see that it is. We could either have another negative in a month that it got paid back, or if that is still outstanding and it's never been resolved and the general fund is still borrowing, then at the end of the year, that balance should be there because it's still owed.
I thought that they had to pay back the money by the end of the school year, though, or the fiscal year, depending on when they borrowed. Isn't that correct?
That's correct, but we're entering some times where people are borrowing, paying back, borrowing, paying back. Sometimes like one day within 24 hours of each other, just because they're struggling with their cash.
Okay. Okay. So in this case, all right. So what should I do now? Okay, so they've just borrowed. Now they're owing this other fund or several other funds $1 million. What should they do next?
You
Is
were
there
correct. You were correct that they really need to be repaying this by April to demonstrate that they are solvent. But
okay.
let's say that they're really, really struggling and their budget cuts aren't going to take effect until the next year, right? So they might have a day or so that they could pay it back, but then they, at the end of the year, they still owe this. For example, just for example's sake,
Okay.
let's trace this $1 million then to the following year
Okay.
and see how we can relieve that.
Okay, so this $1 million is showing in the balance sheet as a balance that they owe to this other fund or funds. And so now we go into the next fiscal year and there's the $1 million.
Exactly. It's in
in the
column
due.
D, right?
Okay,
And
right.
it would just keep hanging out there forever as an obligation. You
Mhm.
can see how in column S, it's still there as well. And it would continue through the cash flow to the next year if we never paid it back. And I think that's significant that people, I'm not saying that that's the correct thing to do or the way to operate, but this is just how the template operates so that people can determine, hey, did I fill this out properly? Do I really still owe this? Right? Because you could even scroll down even further in that and see where this continues, this $1 million. I believe there's one more opportunity to see it. Yeah, see how
Wow.
it,
Okay, so that could carry through for multiple years, is what you're saying?
I'm just saying for, unless somebody resolves that and pays it back. Right? 'Cause you see what I mean? These
Yes.
issues, if they're not resolved, I'm not saying that they're appropriate. I'm just saying that sometimes if the balance sheet transactions are neglected
Hmm.
and no one is forcing the district to move this money between funds,
Hmm.
these items could be sitting there and we may be in a situation where we don't have enough money to repay this debt now.
Wow. Okay. So, so, okay, so then, so that's, I mean, that's a bad situation for the district, which is why they're hopefully thinking about getting a Tran that might help them. But it almost sounds like that's not just a cash flow problem.
That's why I'm bringing it to your attention, because for items that get neglected like this, it's
Mhm.
not just an accounting transaction. This could actually signal it's a potential insolvency. And we might be looking at more of a state apportionment loan for a client that is borrowing and can't repay. And
Okay.
as you've mentioned, Tran is only for those districts that can repay it. It's not to address a solvency problem, if I remember right.
No, it's only a cash flow timing issue. It's designed to help bridge a cash flow timing problem, but it cannot supplement revenues because it needs to be repaid within the period of time that the Tran is outstanding. So these are all really important issues. I think that at this point, Carolyn, we've given a lot of good information to people. Is there anything else that you can think of that we should share at this point?
I think everybody's learned that they need to really be looking at their balances in their assets and their liability accounts, and they need to be looking at their cash, and that hopefully this isn't such a mystery to anybody anymore. I've hoped that by sharing these examples that are rather straightforward, that it's helped people to understand that all that's happening is just about there's several transactions that one on top of the other on top of the other equals the same thing as what we've shared on a one-on-one basis here. You just multiply the number of transactions that you have, but the concepts remain the same.
That's great. I think at this point, I'd just like to end with our contact information in case people have questions. Is that okay if I leave this cash flow at this point?
I think this is a great idea. Thanks, Annette, for talking this through. It's really helped me understand the template as well.
Okay, and so here's our contact information. I really appreciate people spending the time with us, and I hope this was helpful for all of you. Thanks so much for taking the time.